Good day, good afternoon, everybody. Thank you for joining us. My name's Tim Watts. I'm an annuity sales director over here at Insurance Agency Marketing Services. I'm joined by Jake Brunton, another sales director over here at IAMS, as well as Nate Self, sales from Gillico. Before we hop into how this product can help provide some huge growth and income benefits for your clients, we are going to dive into a few reasons on why agents love working with us over here at IAMS. We will have a couple polls as well as the opportunity for you to ask any questions that you want here during the webinar. Just hop into that questions box and toss those questions in there, and we'll get those rocking and rolling for you. The first thing I do want to highlight about us over here at IAMS is when you call us, you're not going to have to worry about that dial by name directory or talking to Susie, the person who always answers a phone call but can never get you the answers that you need. Your phone call is going to be answered by people like myself, Jake, and even our president, Steve Murray himself. Hopefully, our goal is to be able to get you right over to who you're looking for or to get you your questions answered right away. You can reach us during business hours, 800-255-5055, and we're going to even try to get to that phone call within 1 to 2 rings for you. Going to go ahead and turn it over to Jake. You've got a few other programs that we want to highlight about why it's advantageous for you to look at working with us over here at IAMS. Jake, the floor is yours.
Well, thank you for the introduction, Tim. Again, my name is Jake, Annuity Sales Director here at IAMS. I'm going to be starting off today with our new producer builders. And for those of you who are new to us here at IAMS, these bonuses are available based on your production level in your first 180 days of contracting with us. We have great levels that you can qualify at, and as you can see inside each level are some great options for you. We've got incredible business building tools, personal perks for you, and even cash rewards available. If you would like to know where you stand towards your new producer builder, or if you would like to have a conversation about how to achieve that next level, please give us a call or talk to your sales director over here at IAMS. Another business builders program that we provide for our agents is our referred producer program. I see a couple advisors on with us today that have already taken advantage of this program. Our business on the wholesale side of the industry is similar to yours in the field in that one of the best leads we could ever obtain is a referral from one of our valued producers. This is why we want to make it worth your while to refer a producer to us. That being said, when you do refer a producer to us, they get contracted, we're going to cut you a $50 thank you check. Now, where the real money comes in is as your referral right business, you're going to receive an override on that business. Our ownership team, Charles, Steve, Curtis, and Chris, sign checks for thousands of dollars every quarter. With that being said, if you can think of anyone that could benefit from doing business with our team, please type their information into that questions box, or you can certainly email me or Tim for that information. Below that is our marketing reimbursement program, which is our most popular program that we offer here at IAMS. For every $100K in FIA premium, you're going to get $100 in your marketing reimbursement account. Why this is so popular and lucrative for our advisors is we truly do consider this to be your money. You're going to have the flexibility on what services, when, and who you use these funds with. It is your marketing reimbursement. We do not tell you the vendors that you have to use, but we are going to recommend vendors that we partner with and leverage reduced rates and preferred service. We also have our creative team to create a marketing strategy, and we provide in-house services. If you'd like to know how much is in your marketing reimbursement account or have a conversation about how to utilize it, just give your sales director a call at our office. We're going to love to speak with you about that. Now, going on, our back office support. This is another way that we add value to your business. This is the core of IAMS and how Charles Hearing founded us years ago. We want to help the independent advisor work smarter, not harder. We're going to do that with great business building tools and resources. Of course, advanced case design assistance, life and annuity quotes is an area that we assist with. We're going to help you get those illustrations that you request within 24 hours, and I'm going to be completely honest. In all reality, you're going to get it much quicker, usually within the hour. Submission to commission support is handled by our new business teams. Mackenzie heads up is the annuity team, and Michelle is on the life side. They have fantastic teams who work tirelessly every single day to help you get commission quicker. We're going to scrub those applications, submit them on your behalf, and do the administrative tracking, as well as get you updates on the cases as needed. We do this to ensure that you get commissioned as quickly as possible. This is a service that we provide to all of our valued producers, and how we're going to help you grow your business by keeping you in front of clients while our team handles that back office support for you. Our website, it's a great tool for our producers to use, and another reason to work over here at IMES. Once you are contracted, you're going to have full access to our IMES portal and everything that you see on this slide, and so much more at imesinc.com. If you haven't registered for the website, it is very simple to do so. When we are done with this call, just go ahead and create an account. We'd love to see you on there. A lot of great resources are available to you, including illustration tools, online forms, product grids, and product news. Industry updates are also available out there for you to leverage. Technology is where the industry is going, and Luma is our newest partnership to streamline the application process. Most of our carriers are now on our Luma Firelight eApp platform, so you can go to one site to submit all of your business. It is COVID friendly, and some carriers are going to eApp only for some of their product lines, and will also offer extra comp for utilizing the eApp platform. Make sure you ask your sales director before you submit a paper app, because you can earn more by doing eApp. We do have a full in-house creative team. We can help you help your practice, and a lot of items are turnkey and available for you. Many of our sales resources are white labeled, so we can simply impose your contact information and your business logos onto it. Speaking of your logos, Agency Solutions is our expertise for our team. If you haven't created a full customized brand for you and your agency, we can certainly help out with that. This is going to assist with your name recognition, which grows your natural market organically. And lastly, digital marketing solutions are a very popular topic around here at IMES. We can help you with websites, social media marketing, email marketing, and much more. The internet and social media sites are where the overwhelming majority of prospects go to for information. Make sure that you're accessible and represented in those marketing lanes. It's going to be very beneficial to growing your practice. Reach out to myself, Tim, or one of our sales directors here at IMES, or just give us a call when this webinar concludes to talk to them about how you can access IMES Creative, and we'll certainly get that ball rolling for you. IMES also offers a complimentary marketing analysis for agents looking to explore new sales ideas and programs. Whether you're new to the industry or a seasoned producer, this free assessment can help you boost your business with insights on your website, digital presence, branding, current marketing activities, as well as recommendations on trusted vendors for everything from lead generation to seminars and social content. Reach out to your sales director to get started with our creative services at any time. And I'm going to pass the floor back on over to Tim to talk about our IMES Wealth Management.
Awesome. Thank you for that, Jake. So I'm going to go ahead and launch our first poll, and do you have a comprehensive 2025 marketing strategy that's specific, adaptable, and individualized for you and your practice? Right now, we are in the third month of the first quarter of 2025. If you're not on track for those revenue goals for 2025, that comprehensive marketing strategy could be a game changer for you. I'm going to give just another 10 seconds or so for some additional participation. Got record participation thus far, so if you haven't voted yet, you're the outlier. We'd love to hear from you. Appreciate everybody who's already voted. All right, I'm going to go ahead and close that poll. We do have our IMES Wealth Management. We founded this over 6 years ago, and we've grown this division at IMES very organically. We've helped advisors become IARs and pass the Series 65 at a very successful rate. Once we have you registered, we're going to bring a great value to you and your practice with incredibly competitive fee structure for both you and your clientele. Additionally, we've got great technology and investment platform. This has been a major growth sector for our business, and assets under management could be a major growth sector for you and your business as well. Next, we have our life and annuity academies. Perfect timing here as we are finalizing registration for our first one. This will be April 2nd through the 4th in sunny, hopefully, and warm, hopefully, Des Moines, Iowa. We're going to be partnered with Athene on this one, and we do have room for 1 or 2 more additional registrations. With this event being about a month out or less than a month out, those flight tickets do get expensive. We cover all of your expenses, go over product deep dives, marketing strategies that other agents are having huge success with, as well as my personal favorite, which is where we teach you different sales strategies on how to position annuity and life insurance products for your clients' pre-retirement and retirement needs. If you haven't registered and have interest, definitely reach out to Jake or myself once this concludes, and let's see if we can get you out here. If that April timeline doesn't work for you, don't worry. We're going to have 3 to 4 more academies throughout the rest of the year. Talk to Jake or myself, and let's see if one of those dates would be a better fit for you. Go ahead, Jake. All right, we are in the middle of qualifications for 2 trips. One on the screen that you can see right now is our trek to Quebec. Now, this qualification is ending soon, June 30th. If you don't know where you're at on qualification, but have been working with us over here at IAMS, give Jake or myself a call, and we'll let you know how much more, or if you've already qualified for that trip to Quebec with Plus One. If you haven't yet started producing with us, we also have another trip to Cap Capa and Dominican Republic. In that qualification goes through the end of the year, so still plenty of time to qualify for that. If you haven't followed us on Facebook or LinkedIn, that is where we're going to put out those industry updates, product highlights, rate changes, and all of those other updates. So definitely like us out there. I'm going to go ahead and launch our second poll, and that is, are you on track, or did you hit the Q1 revenue goal for annuities and life insurance here in 2025? Definitely have 3 answers there, yes, no, or I didn't have a Q1 revenue goal. Appreciate everybody who has voted thus far. Let's see if we can get a few more on there. As you're finishing up there, Jake, if you want to go ahead and give control of the presentation to Nate, do want to give a quick introduction to Nate. Nate and I have been working together for years, even previous to IAMS. And one thing that I know about Nate is he's going to be an advocate for you, the agent, and try to get your cases submitted through. So when you call with an issue, anything that needs to get resolved, he's going to be that advocate there for you. And over here with us at IAMS, he's just been a pleasure to work with. Gillico, A-rated carrier. They've got 100% renewal rate integrity, commission bonus, lots of great reasons why you should check out Gillico. And if you haven't yet, I'm excited to turn the floor over to Nate. So without further ado, Nate, the floor is yours, sir.
Thank you, Tim. Likewise, it's always a pleasure getting to meet and work with your agents and everyone at IAMS. It's just been a great experience, great growing partnership, and we're thrilled to be one of your core carriers. So I appreciate you having me today. And it's the start of spring break here in Des Moines, so everyone's in a relatively good mood. It's 73 degrees, basketball's on, and it's just an exciting time of year. And today I have the opportunity to kind of go over why we built the Wealth Choice the way we did. It's been on the shelf for 5 years now. As Tim mentioned, we've had tremendous renewal rate integrity. But today I really want to focus on the design, where you can position this in your practice, and make sure you're comfortable with what we have to offer to see if there's a good fit for you. We do have a brand new website at the bottom of the screen there, gillico.com. I welcome everybody to go check that out. It went live yesterday. Lots of great training, client-friendly resources. You'll have your access. If you have done business with us in the past, you can register to gain access to your accounts. It's our new MyConveyor website. Definitely go out there, test it out, and reach out with any feedback or questions. That's my direct cell phone and email. So I'll get started here. So today we'll go through the Wealth Choice. It's our flagship national FIA. It is designed for both growth and income, not just one or the other. It can be customized for your client for both. We'll go through some different case designs and positioning concepts, and then we'll wrap up with making sure you're aware of our commission bonus program that we pay out every single quarter to our loyal producers. If you haven't worked with us in the past, we are an insurance carrier based down in Baton Rouge, Louisiana. We've been in business for almost 100 years. We're on our 99th year this year. A- rated by AM Best. We were reaffirmed by AM Best in November. We did $3.1 billion in premium in 2024, and we only do business with our marketing organizations. That's the only way you can have access to our contracts, and that leads to just an overall great experience from a service standpoint, as well as from a sales perspective. Everyone that has access to our contracts is well aware of how our contracts are built, where they're positioned. So we want to keep it that really exclusive niche distribution so that everybody from the agent all the way down to the client has an overall great experience. So the Wealth Choice is a very unique FIA in the marketplace. And I say that because many of our competing carriers in the industry focus on building multiple products to fit different needs. Whether that's they want to build an accumulation product, they want to build an income product, whether that's an early income or a deferred income. What we've designed here is a simpler solution where you can really customize it for your client and fit a lot of different needs with just one solution. So everything is built on the account value with Wealth Choice. We do not have a benefit base, which is rare for an income solution to not have a benefit base. So the income rider that's available on Wealth Choice, it's completely optional. So you can remove it at any time. The only thing is you just need to elect it at the beginning. The growth rates or the accumulation rates are the same with or without the income rider. There's no premium banding. There's no reduction for joint income. So it's a really stripped down version of an FIA. And all we're trying to do is provide the most consumer value in form of rate, accumulation rate, and payout factor, the amount of actual income the client's going to receive over their lifetime or their spouse's lifetime. So on the growth side, what can you get? Obviously, with an FIA, you get tax deferral. You participate in market upsides. We have 3 different indices to choose from, as well as a fixed rate that's paying as high as 7% right now for a year 1 declared rate. We'll go through the rates here at the end. Full protection on the downside. And we really do pride ourselves in reliability on sustainable renewals, guaranteed rates, and protections for the client. If we do see spikes in volatility and we have to reduce our caps and pars due to higher option costs, we want to provide some safety nets in form of bailouts and other index strategy guarantees to provide some certainty to the client that the carrier's got their back long term. They're not buying a 1 to 2 year contract. FIAs are 5 to 10, maybe 14 years in some circumstances. Wealth Choice is up to 10 years, but nonetheless, it's extremely important that you're working with a carrier that has contract guarantees built in and safety for that. Their growth potential is not going to be harmed by the carrier reducing rates over time. Now, on the income side, the rates on the growth, as well as if they add the income rider, are identical. We wanted to build something that had extremely high payout factors. So a lot of carriers, they'll come out with these big income bonuses and roll-ups. But at the end of the day, what matters is how much actual income is the client going to receive. So without having a benefit base, we're actually able to have extremely high payout factors, as high as 8.5% guaranteed for life, single or joint, and there's no wait period other than a 30-day window to get through the free look period. So it's a very flexible rider. and the cost of the rider is only 95 basis points. And it's on the account value because that is all there is. There's no benefit base. So it's a true 95 basis points, and it comes out at the end of the year. The income rider can be added for anybody up to the age of 80, and it's on the 7 and 10-year versions. That's really the only decision the client has to make is, do you want the income rider and longevity protection or not? All the other decisions as far as when to activate, how frequent the payments are going to be, if they want level or increasing, all that can be decided down the road. All they need to know is, do you want the living benefit rider to protect against longevity risk, amongst other risks, and it can be removed at any time. Some of the other benefits for Wealth Choice I like to highlight: 10% penalty-free withdrawals every single year. That's with or without the income rider, including our bonus product. Our 10-year has a 10% premium bonus. All of our contracts have terminal illness and nursing home waivers built in automatically. So if they ever have one of those events, they have full liquidity on their account value. And the last being, we actually have an enhanced legacy death benefit that's automatically built in, no fee. That's 110% of their account values paid out as long as they elect a period certain payout of 5 years or longer. So the only possible charge on our Wealth Choice is if they add the living lifetime income benefit rider. And again, that's only 95 basis points. So very easy to explain. How it's calculated as well. So all you need to do is you take their account value when you decide to activate the income, take the payout percentage times the account value, and that's going to be their lifetime withdrawal. It does not reduce after the account value hits 0. And we even have an increasing option for inflation protection. So on the screen here, I have it broken down every 5 years. It goes up by about 10 basis points per year, but I just wanted to show you a few different age brackets. So at, say, age 65, you've got a single person, they want to start income immediately. We're going to pay them 7% for life. They're still going to participate in the market upside on any S&P strategies they choose, or the fixed rate. And that's for a single or joint. So if you have two spouses, they're both 65, they'll get 7% for life. Now, if they want some inflation protection, we do have an increasing option. There's no additional fee for the increasing option, and is quite different from our competitors in the fact that it is a contractually guaranteed increasing option. So what I mean by that is every single year the payout's going to increase by 3%. That's compounded even after the account value hits 0. So you'll start from a lower percentage, as you'll see on the screen, but every single year it goes up by 3% to make sure that we offset any long-term inflation impacts with a target Fed inflation rate of 2%. So with the flexibility of
Hey,
the
Nate, can I bring up something real quick? Can you go back to that last screen?
You bet.
So I just asked our old friend ChatGPT what the normal drawdown is for a client that is 65 years old on an AUM setup.
Right.
And it's still 4%. So I just wanted to just pause here real quick. And if you're working, agents out there in the universe, if you're working with clients and you're up against an asset manager who's doing a 4% drawdown, with Gillico, you could do a 4.8% increasing guaranteed for life with legacy benefit if they were to pass away early, or you could be at 7% level. So 7% level beats it by 3% right away, and 4.8% beats it by almost a full percent. And you're going to add the guaranteed increase of 3%, which is contractual. I just think that's something I didn't want people to miss here.
Yeah.
When you're going up against those guys that are in AUM, or if you're in AUM and you're using a 4 or 4.5, 5% drawdown, you can see real quickly right there how this product can provide your clients a better guaranteed income with with lots of benefits. So apologies for interrupting, but I thought that was something worth just pointing out there.
Absolutely. I mean, that's a great point. Everybody's probably familiar with the safe withdrawal rule and the back testing and how that's worked for many years. But, you know, because of the interest rate environment that we find ourselves in, these payouts are as high as they've been in 18 years. So it's a really great time to be locking them in, so to speak, for life. You know, this is once you purchase an annuity with an income rider, you are essentially locking in interest rates for the client's entire life. And in this circumstance, it can be a single or a joint life. So yeah, to your point, Tim, yeah, 4%. We didn't have this concept. It's just a few short years ago, and that's just because of the interest rate environment. So certainly a great time to be taking advantage of these high payout factors that carriers can offer. Absolutely. So as I was mentioning with the living benefit rider, a lot of the decisions you don't have to make with your client. All you have to know is if they want the protection or not. So once the rider is selected, the payout factors that were on the previous screen, those are locked in. So regardless of when they turn it on, those payout factors are locked in. You don't have to decide single or joint, level or increasing, frequency, or when to turn it on. All they need to know is, let's add the income rider. Say they get 6 months down the road, they turn on Social Security, they realize, oh, I don't think we need it anymore. You're more than likely, you can remove it. So the fee would go away at that point, and you can participate in the index growth, which is a very unique solution because a lot of the carriers, like I was mentioning earlier, they build income and growth products. So if you go with an income product and they want the income protection, then their objectives change over time, they're really kind of stuck because it doesn't have those great rates that you need if you were to remove the rider. So let's go through a scenario here. We've got Rob, he's age 67. He's got $250,000. He's just retiring, taking a portion of his portfolio, and he wants to guarantee it because of how high the payout factors are right now. So he's going to get 7.2% levelized for life. And you just take 7.2 times 250,000. That gives him $18,000 guaranteed for the rest of his life. And he's still able to participate with cap rates that are double digits and guarantees as well. Now we add his spouse, Mary. She's age 65. They're still going to pull from his 401k. They're going to roll his 401k over. It's going to be individually owned, but we're going to add a joint rider. So Mary can be on the rider, and if Rob were to pass away first, she could do a spousal continuation and be the owner moving forward. And for a joint rider, all we simply do is we look at the youngest spouse's age. So Mary is 65. Our current payout at age 65 is 7%. We're going to guarantee both Rob and Mary $17,500 guaranteed for the rest of their life. Very easy concept. Now, let's take a look at increasing. Same scenario, we're just going to base it on Mary's age, 65, and with an increasing payout, that starting point is 4.8%. So at 4.8%, 12,360. And the great thing I love about our increasing option is you can confidently tell your client, in year 12, in year 15, in year 18, this is what your income is going to be. There are very few increasing income options out there on indexed annuities where you can confidently say they'll be back tested based on historical performance on the indices. This is separate from all of that. This is all contractually guaranteed. So it's 3% compounded every single year until the last spouse has passed away, and any remaining account value would go to their beneficiary. So some different ways an FIA could help your client. Obviously, we went through the predictable retirement income to reduce longevity risk. You can also use an indexed annuity for growth as a bond alternative, a safe money alternative in their portfolio. With the market being down over 7% already this year, we're hearing a lot of folks, they want to recover their market losses with a premium bonus and then participate in the upside, protect their downside. But one of my favorite concepts is during that retirement red zone, the 5 years before retirement and the 5 years after retirement. Those are the most important times to protect the client's assets. So I want to show you an example here of a client by the name of Jake. And Jake is 65 and he wants to draw retirement income from his portfolio each year to supplement other income sources. He's worried about the impact of negative market performance that we're seeing here in 2025. In scenario A on the left, things play out okay since the negative performance happens later in his retirement. But when you look at scenario B on the right side, negative performance happens earlier. And you can see how it causes its funds to deplete in year 13. Even though both of these scenarios assume a 3% rate of return, the return's the same. It's just the order in which those returns were made. And that's something that is completely out of the control of the client. They can't control when a downturn in the market occurs. All you can do is prevent it with hedging, with insurance products and other ways to ensure that the outcome of the client is not impacted by sequence of return risk. So we have plenty of resources for you on this concept. If this is something that you've been hearing a lot from your clients about, if they're just starting retirement or nearing retirement, it's a really good talking point to go through this exercise of sequence of return risk, and an FIA does a really good job of limiting this with the full principal protection. I did want to highlight, Tim, before we wrap up here, where we saw a tremendous amount of business in 2024. We had a record year last year. A lot of our IMOs had record years, and the industry overall was a record in 2024. And the reason that is because there was a tremendous amount of refinancing going on and helping clients take advantage of the interest rate environment where they purchase a contract in a lower interest rate environment. There's still a great opportunity out there. We've made some adjustments to our products to make them fit this type of market, but it is still a great time to be reviewing your old annuity business. Maybe some older underperforming variable annuities with market volatility, higher fee drag. You can upgrade to straight MYGAs to another MYGA or an FIA. Contracts that are completely out of surrender, it's very easy talking point. And where we won a lot of business, we were actually the #1 selling in FIA in the third quarter last year. And the reason for that was income to income refinancing. So what I mean by that is the client already has an annuity with an income rider, and they want to compare what they're receiving now in form of their withdrawal benefit, or they want to compare what would they receive if they would turn it on today compared to what if they were to move the surrender value over to another carrier and start income from there. Lot of cases where we were able to not only increase the client's income sometimes as much as 30, 40, 50%, but we could also add a spouse and protect more than one life. So it was a really great year for that reason, and it's still a good opportunity for you if you have income riders that are on your books. They should be reviewed, and your team over at IMS has all of our suitability guidelines to make it a very easy process for you when you're going through this exercise. So wanted to quickly highlight the rate sheet to wrap us up here. We raised all of our fixed rates year one on Monday, March 10th. We're hearing a lot from our clients that with the volatility that we're seeing here already in 2025, let's set the floor, get them a nice guaranteed rate. The minimum floor on that fixed bucket is 2.85%. So the year one rate is between 3 and 7%, depending on which version you choose. A 10-year no bonus is 7% guaranteed year one. All of them have a minimum floor of 2.85. So I do anticipate that to come down somewhat in year two, but just know that minimum floor is quite high at 2.85%, and that is for life as well. Our second most popular strategy is the annual point-to-point cap. We're well known for our plain vanilla annual point-to-point cap. The 5 and 7 year stand out right now at 1050 and 1075 respectively. We added trigger strategies last year. If your clients like that simple 2 outcome approach, where as long as the S&P is flat or up, you're going to get the trigger rate as high as 7.1. And then the one that I really like to highlight as well is the second from the bottom there, the S&P 500 dynamic intraday. There's been a handful of carriers that have added this to their suite, which is tremendous. It's a next generation index. It is only S&P in cash. You're going to get more upside potential than your standard point-to-point cap because the volatility is slightly lower than the standard S&P, and we're going to guarantee that rate for 5 to 10 years. So if you go with the 5-year product, we're going to guarantee you a cap at 1275. 10-year, we're going to guarantee that rate up to 11%. Good thing to note, you do not have to have any of your clients' assets allocated to it, so they can trade in and out freely, and we're still going to guarantee the rate for them. And the great thing is it's only S&P in cash. So if you've had problems with other volatility control indexes in the past that have underperformed and you weren't able to explain why they underperformed, that's a big problem. And the great thing about this one is there's only 2 components. So we know very, very well why it performed the way it did. And if you want some more information on that, happy to get that out your way on the S&P dynamic intraday.
Hey, one quick thing on that, Nate, before the next slide. So if you've got a client who's taking, I think it was a 67-year-old client, was 7.5% off of for an income payment. Look at that S&P intraday and just look at, whatever income product you're using right now. So let's assume the same 7.5% payout. And let's say the product you're using right now has a 2.5 or a 3% cap. So in that instance, even on the years when the S&P is up, you're paying out 7.5%, you've got a fee, and the best you can earn is 2.5, 3. So you're down 4% plus a fee. Now let's take a look at this product. You put it in the 7-year, you've got a 13% S&P dynamic TCA, so that thing hits. So your clients get 7.5% to them, and then they're still going to see their accumulation value go up because even after the fee, that 13% is going to provide them accumulation value extra. Like when you guys are talking to your clients for the price of a cheeseburger, in some cases, or for the same income in a lot of cases, especially if it's joint, you're going to get the same high income payout. And then this product, you could actually pay them out and add to their accumulation value. To me, that is just, a combination that is not going to be there forever. And so if you've got any income products that are a little bit older, you've got clients that are concerned with, what happens if I pass away early? I want to, give some funds to my beneficiaries. This is a great way to, for the lack of a better term, kill 2 birds with 1 stone. You've got a great product offering them guaranteed income, and then there's the accumulation power behind it with a guarantee. That 13% on that 7-year, if you lock that in now, it's not going to go down for all 7 years. You never have to worry about that renewal rate conversation.
That's so well said, Tim. I think, the combination of growth and income to be able to solve for both is very unique. And the other thing that's unique is on an income product, having good renewal history. Carriers that have strong payouts, they know those assets are sticky, right? That they have the income rider turned on. They likely believe that they're assuming that contract's going to stay on the books for quite a while. They can bring those rates down over time because they know those assets are sticky. Now, with us, we wanted to build in some guarantees even on an income product. So the TCA, the Barclays Global Quality Index, both of those are guaranteed for the term, regardless if the client's going to choose it or not. We also added a bailout on the S&P point-to-point cap. So if we ever reduce rates, the client can get out surrendered penalty free if we ever pierce that bailout percentage. And we've done a really good job since we launched this product 5 years ago, having consistent renewal history. We've had this income rider available for the last 5 years, and we've had tremendous renewal integrity. So I appreciate the comment there that you hit the nail on the head. And if you want any more comments on renewals or guarantees that we're offering on top of the income, certainly reach out to Gillico or your IMS sales director. We'll wrap up here with the bonus program for all of your efforts and your loyalty. We want to make sure you're recognized and rewarded and reinvest in your business. So at $1 million, which is the lowest tier to hit in the industry, we'll pay you an extra 0.5%. This is a calendar year program that we pay out every 3 months, 50 basis points at $1 million, 75 basis points at $2 million, and a full 1% at $3 million. It's all paid $1, and we've had some really good feedback on that, considering the low barrier to entry for new producers, and also it's also the lowest to hit 1% at $3 million. With that, Tim, I want you to thank you for having me and see if there's any questions in the chat and throw up my contact information along with my internal, Josh Johnson.
Thank you, Nate. Appreciate it. And I swore I wasn't going to forget my third poll question today, and that is, would you like some more information on Gillico's annuity products and contracting? There's a limited distribution contract with us over here at Gillico. So depending on who your IMO is, they may not have access. So that's another benefit of working with us over here at IMS. I do appreciate everybody sticking on with us. Everybody who hopped on at the beginning is still with us. If you do have any questions, now is your last call for that question, and we'll get it answered. Otherwise, Jake and I will be giving you guys a call to follow up, get those contracts going, the illustrations rocking and rolling. One last thing I did want to comment here, and it doesn't look like we have any questions, Nate, so I think we were pretty thorough here. If anything comes up here, we'll certainly get it answered. But the interest rate environment is changing. So on Tuesday of this week, today's Thursday, I got 3 alerts from carriers that they're dropping rates. So as Nate mentioned, the payouts and the benefits that we can offer to your clients right now are the highest they've been in 18 years. It looks like it's going to be lower than that going forward. So if you want to lock in these gains right now, lock in these benefits, now's the time to do it, because the pricing options for the S&P and other indices are getting, I would say much more volatile. We actually spent about 10 minutes in our sales call this morning just talking about how the S&P is much more expensive than it was in the past. So lock in these gains now, get your clients replaced, refinanced before you have the opportunity to do that. So I'm going to go ahead and close that poll. And Nate, for anybody still out there, that's Nate's real cell phone. That is the number you can get a hold of him. And his #1 goal is to help you guys get that policy from submission to commission. And he's a great resource. So with that, Nate, any last wrap-up comments here, sir?
Yeah, I think you're spot on there as well. I mean, now is the time, with the market volatility we're seeing. The 10-year has already fallen. It's down near 420 right now. We may not see these payout factors for quite a while again. It's a good opportunity to talk to your clients, show them the relative strength of these payouts to what they've been in the past, and upgrade contracts while you can, and use all the resources at your disposal to write as much business as you can. Now, reach out for marketing support. We're here to help, and we really appreciate the opportunity to earn your business. And I want to thank you, Tim and Jake, for having Gillico on this afternoon, and wish everybody a spring break and a wonderful spring break. And thank you all for the business.
Awesome. Well, Nate, Jake, appreciate your guys' help. Everybody who joined us, thank you for hopping on. Have a blessed day. We'll talk to you soon. Bye now.